Hi, welcome to the Market Alert for Tuesday, the 6th of December 2016. So yesterday, the 5th, Monday the 5th, let's go back a bit here because obviously we had the results from Italy, a resounding no, and of course the market gapped lower and then traded 200 points higher before the market actually got to open. So all the work was done in the pre-market session, and I'm going to come to the Italian referendum in just a minute, and also the market's bizarre activity following this, the same as Trump, Brexit, etc. So the market then opened, it tried to move higher, but unfortunately there was just no momentum left. And what's interesting here, even though the market was sideways in the pre-market session from around 10 a.m., prior to this, from 8 a.m, you can see the market moving sharply there, and of course when the market opened late on Sunday evening. So the market ran out of steam, and then we got a short, so a 24-point loss, and then the market moved lower and managed to get most of this back from this trade as the market to move lower. And then again you can see the market started to trade sideways once more, and then again attempting to move lower, but not making any progress whatsoever, and a bit late on in the session after the market had failed to really move. I was going to send a note out but forgot to hit the send button to say after this one stand aside. You can see there the market just giving a few points before coming back there, but by now you're probably used to the pattern that we're actually getting there. In the daily chart, so we've got the market showing there that prices gapped down and then moved up. We had a new all-time high yesterday in the Dow as well. This coming in, just put this on there for you and remove the previous one. I'll remove the previous one first and then replace this one. There we go. So the new high is close to 19,300 at this rate. We're going to possibly see 20,000 on the Dow. Just the insanity continues. The market continues to move to the upside, and again more on that in just a moment. News-wise today, Tuesdays can be difficult because everything's factored in on a Monday. I say this every Tuesday, so be warned, the market could be sideways. We've only got the factory orders. These are out at 3 p.m. and they're forecast to show a massive improvement from 0.3 to 2.5, which, if the market hasn't moved higher in the pre-market session by a significant amount, then you may get the chance to actually get some momentum in this. But I will be here this afternoon, so I will let you know what thoughts I have on the market once it's actually opened. And then, of course, we've got the implied volatility, 1032. No surprise there. The lower this goes, the bigger the correction is going to be. We've got the interest rate decision a week tomorrow from the US, and then we're off to the new year. And if she increases interest rates, then we know what the likelihood is going to be. You can't guarantee anything anymore. There are no fair markets. No markets able to find and have price discovery either. It's all rigged, and again I'll come to that in just a moment. So the implied volatility moving down quite nicely there. So yesterday, just going back to the Dow's activity on the overnight, Italian crisis sparks buying panic in US stocks. Dow hits record highs, and there's a pattern here that's certainly becoming a very interesting one. And another article on Zero Hedge, which is headline, Wall Street analysts are slowly losing it. And you can understand why, because the markets are not doing what they're supposed to be doing. I'm not going to read all of this to you. There was just one piece that I wanted to read, and of course let me see if I can find this for you. And here it is. This is by Michael Block, who works for Rhino Trading, and he says the pattern of fading a potential crisis and then scrambling to cover and get long when everyone takes a breath and realizes that this time it is not the apocalypse either, still holds more than ever. I can't justify any of this, and this is the same for all of us. He says the lesson investors and traders are getting is that everything is a buying opportunity, and you need to not miss the boat. Brexit, bullish. Trump winning the election, bullish. Italy saying no to the referendum and the Prime Minister handing in his resignation, bullish. Heck, all we need is a coup d'etat in India and the entire Belgian banking system to go kablooey, and the S&P will be at 3,000 by Christmas. And this is the cynicism now that many traders have, and understandably so, because it doesn't matter what crisis comes along now, it is seen as a buying opportunity, and the market just continues to move to the upside. They slam the gold price, and it just doesn't make any sense. All of the old traditional ways of looking at the market, the orthodox approach to economics, it no longer exists, and this is because we have central banks taking over the markets with computers and running these markets. And just to add to this, I mean, I've been going on about this for years, but Jim Sinclair, also known as Mr. Gold, did an interview the other day with Greg Hunter, and as he said, there is a financial pressure cooker, but also he calls it a virtual market, and he's absolutely right in what he says there. We definitely have virtual markets. So if you get 30 minutes free today whilst watching the markets, then just have a look at this. I've already placed the link in the email alert so that you can don't have to go searching for it. You can just click on the link and go straight to the actual interview. Very good interview, and sums up everything that I've been saying for a long time about these markets. So it's nice to know I'm not on my own when it comes to the madness that appears to be out there at this time. Right, that's it for this one. I will hopefully speak to you later on this afternoon after the Dow's open, see what's happening. Very difficult to predict, especially with Yellen's meeting a week tomorrow. So the markets could tread water for the duration. Unfortunately, stuck in that bit of a sideways move. But it is what it is, and it's just something we have to live through. But who knows, we may get something that just comes in and gives the market a bit of momentum. Right, that's it. As ever, thanks for your support and also for watching. See you in the next one.